So it's time to right size and you found your next dream home. What different financing options do you have now? I'm Colleen Odell and I'm here with Marie Stemen from Mutual of Omaha. And we're here today to talk about a unique financing option called a home equity conversion mortgage for purchase. You may have heard about it. You also may have a lot of questions and maybe even some misinformation. So today we are going to explain what it is and how it can help you finance your next home. What is a home equity conversion mortgage for purchase? Anne-Marie?
Thanks, Colleen. I'm Marie Stemen with Mutual of Omaha Mortgage, and I have been working with this program now for 13 years since the program got signed into law and launched in January of 2009. A home equity conversion mortgage is an age-based, FHA-insured purchase program that allows folks 62 and better or married to someone 62 or better to buy their next home for about 55 to 60% down and never have a monthly mortgage payment.
So now let's find out a little bit more about some of the common questions that are asked about it. Is this a reverse mortgage, like the ones that we see advertised on television?
Actually, it's not. The one that you see it's not the one you see on TV. The one you see on TV is where you own a home, you have equity in your home, and you're converting some of the equity to cash, and you don't have a mortgage payment. It's actually been around since 1988. The HECM for Purchase program's been around since 2009, and it's used for an entirely different purpose.
I see. What's the catch, though?
What's the catch? Well, you do have to be 62 or better. It has to be your primary residence, and the money you bring to closing's got to come from the liquidation of an asset. It cannot be debt. It can be a gift, but those are the catches, and it's typical. Like any other mortgage, you still have to pay your property taxes, your homeowner's insurance, your HOA, and maintain the home.
Does the borrower own the home?
Absolutely. Borrower is the only one entitled to the home. They can sell the home at any time. There is no prepayment penalty. They just list it with a real estate professional, sell it for market value, pay off what's owed, and keep the difference. No different than any other mortgage.
One of the questions that I have is my husband is over 62 and I'm not. Do we still qualify for this loan? Or can we?
Yes, if you're married to someone 62 or better, even though the spouse is younger, you can qualify. It would be based on the youngest of the two of you's age as far as the down payment, and then you're protected.
Wonderful. We're also thinking about wanting to pass along our home to our children when we both pass. So what happens then?
Well, no different than a regular mortgage. The home passes to the estate, title goes to the estate. The estate would determine what the market value is. Let's say it's $500,000, and they look at the mortgage balance, pay off the mortgage balance of, let's say, $400,000, and the estate would keep the difference. So the house still does pass to the estate.
To recap, can we go over some of the key takeaways?
Absolutely, Colleen. You do have to be 62 or better, or married to someone 62 or better. It must be your primary residence. The money you bring, that 55 to 60% down, must come from the liquidation of an asset or a gift, but it cannot be borrowed money. And you still have to cover your property taxes, your homeowner's insurance, and your HOA.
So where do you start? For more specific details, I encourage you to attend one of Anne-Marie's weekly Zoom seminars, or by calling her or a member of her HECM team at Mutual of Omaha Mortgage. It's as easy as going online to mihomes.com/H4P or visiting any of our Central Ohio MI Homes locations. To see all of our locations, go to mihomes.com/Columbus. I want to thank Anne-Marie for joining us today.
It's been my pleasure, Colleen.
We hope you found this information helpful and look forward to seeing or hearing from you soon.